Hello traders, Mark here with the OR Trader. Wanted to go over a video today and show you why we had such a strong move up this morning and help you understand why price acted the way it did. For those of you who might not know, I trade Mark Fisher's ACD method. I trade the ES and I use a 10-minute opening range. And I post my A points on Twitter every day, and if you watch those, you'll know that these levels are very, very important. And I'm going to explain this trade today. So let's get into it. The line that you see here, okay, this marks the last bar of the pre-market. This is the actual opening 10 minutes. Okay, so this is the opening range. This bar is these are 10-minute bars, 10-minute chart here. I simply put a line on the high and the low of that bar, and that tells me what my opening range is. And then I apply the calculation that I have for the A point up and the A point down. And the A point up goes from the opening range high up, and it goes from the opening range low down. And those lines are marked by the yellow lines here that you see. Okay, so this is an A up here, and this is an A down here. Now the purple lines that you see on the chart are also part of Mark Fisher's ACD method, and this is the pivot range. Okay, and so basically he takes the daily pivot, okay, and then he makes a range out of it, and that calculation you can find also in his book, The Logical Trader. This dotted line right here, this white dotted line, that is the daily pivot, and then of course this upper one is the pivot range high, this lower one is the pivot range low. And then what you want to watch for is you want to watch for where did you close in relationship to that pivot range. Well, yesterday we closed below that pivot range, so this pivot range should have been resistance. It should have been a resistance zone today. Okay, now after the first 10 minutes, and we have established our we've established our opening range, and now we apply our A up and our A down to the chart. You can see that the A up was right near the top of the pivot range. Now this is actually a good opportunity to for fading this A up, in knowing that you're going to know whether you're right or wrong, pretty quickly, and that's exactly what happened today. Most of the time I fade A's on the first touch on most occasions, okay, because the ES is a reversion to mean type of market. It's not a true trending market. It only trends about 20% of the time. So today is an odd thing to see, a trending market in the ES, and also it's odd to see because we've actually had 3 trending days in a row here. 2 down and today up, okay, which is very odd. In one thing I want to show you is that this trade, once we went through the pivot range, okay, and we confirmed this A up, this is a very powerful signal, and that's because in Fisher's book, The Logical Trader, he talks about you've got 2 indicators telling you the same thing, okay. You've got an A up that's telling you to have a long bias, and then you've got a pivot range that was supposed to be resistance, but that resistance failed. And so now you've got 2 indicators telling you that you want to have a long bias. And so let me kind of go through this a little bit. Okay, with the A up, you're this level, the yellow line here, you want to see price trade at that level for at least half the time of your opening range. In this case, we're using a 10-minute opening range, so you want to see price trade at that level for at least 5 minutes in order to confirm or establish. What you're looking for is price getting accepted or is price getting rejected. These A points are like stretch points. If the market can stretch to that point and stay there and get accepted, then chances are it's going to go higher. If the market stretches to that point but gets rejected, then chances are it's going to revert back to the mean or back towards the middle of the opening range, and possibly further down. Okay, so today if you tried to set up a fade of this A up, you would have gotten run over. Okay, and that's okay. if you did that, then that's fine. You just, turn around and accept what the market has told you. And in this case, you would, wait for a pullback to get long. Now, I want to go over one thing that I've learned over the years is that with this method, it tends to have big stops if you play it according to the book. Okay, and what I've learned to do is use other means to help me get into the trade, and I want to show you that. Okay, so just so we're clear, opening range, A up through the pivot, very strong. You want to press on the gas, you want to increase your size, and you want to go with this. Okay, and no need to chase it, because if you notice that the A up was at 61 3/4. Okay, so this 10-minute bar didn't finish until it closed up here at around 67.50. So you're giving up 6 points here if you're chasing, and you don't need to do that. And you want to wait for this pullback. Now, a good way of looking at this is the pivot range was supposed to be resistance. Well, if resistance fails, then old resistance becomes new support, and so it pulls back to the support area and then moves on. So let me go over my trigger chart, okay, for you. Okay, over here, well, let me go back real quick to that other chart, and let's look at where this pullback was. This pullback happened at about anywhere from 10 o'clock to 10:10. Okay, so this bar was 10 o'clock to 10:10. So you in that area, you want to be looking for a way of getting on board. Okay, now I use a 377 tick chart with a Keltner channel with 21 point exponential moving average and a 1.5 ADR to separate the bands. Okay, so if we go back here and we see that this is our A up point right here. Okay, so right here price gets above it, and this is at 9:44 in the morning. Okay, and that's New York time, and you're looking for it to spend at least 5 minutes. Okay, so that would be about 49, which takes you to right about in this area. So at about this area, we have definitely spent time above. Okay, and so this confirms it. But we're way up here, like I told you, at 67.50 area, when our long was at 61 and 75. So what you want to do is you want to wait for an opportunity. Now, in this case, what I do is I use these bands to help me get long or short based upon what's going on. Now, I use a closing bar. Okay, so in this case, let me go back to let me just take this illustration right here. This bar closed below the lower band. That's a sell signal. Okay. Now what I want to wait for is I want to wait for a pullback to the midline, okay, to sell. Now you could have gotten short in here and it went in your favor, but think about this. I don't want to take these shorts. Okay, why? Because I've got a confirmed A up. My bias needs to be long. Okay, so again, even here you could have gone short. This would have paid you a little bit here, but again, you're looking for a pullback to this line here. So in this scenario, I can't get long until this point right here, and I'm going to explain why. Using this Keltner channel, this is telling me to be in a sell, it's telling me to be in sell, 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 still in a sell, until I can close back above this upper band. Right here, this bar closes above the upper band. At this point, I can now look to buy a pullback to the mid band, and this area would have been a good area to get long. Let me bring this over here. Or you could have waited. This area didn't touch the line. Okay, so if you're really patient, you could have waited till here to get long. From here, what I'm going to do is I'm going to get long, and I'm going to use about an 8 to a 10 tick stop or a closing bar below the lower band as a stop. Okay, and then once I'm in, now what I'm going to do is I'm going to trail my stop, and I'm going to, of course, if you're trading multiple contracts, you're going to be, dumping some along the way. So going back to the other chart here, you can see that in this area, you're looking for your opportunity to get long. I use the Keltner channel, 377 tick chart to help me get on board, and then you just start trailing your stop. And of course, you can see that this was a very powerful move here. Moved up, nice pullback, and another move up. And this signal, I've seen over the years, I've seen this happen time and time again. If you get an A up or an A down through the pivot, you've got two indicators firing. You want to step on the gas and go. Hopefully this helps. You understand why we had such I saw a lot on Twitter today. People were surprised by this. I was surprised at first, but after we confirmed the A up above the pivot range, from that point on, I was not surprised at this big move. Okay, so hopefully this will help you understand the A points. I post them every day on Twitter, and any questions, just fire them at me. Okay, guys, see you later.